Copper is the new gold? Investors rush into copper.
They're lying to you about copper. Wall Street, Bloomberg, CNBC. Copper is the new gold. Buy copper miners now. The copper supercycle is here. I spent 40 hours investigating this story, and I found something disturbing. The same banks telling you to buy copper are quietly selling their positions. The same analysts hyping copper shortage ignored 880 million tons of known reserves. The same media comparing copper to gold forgot to mention copper loses 60% of its value in every recession. This isn't analysis, it's a trap, and I'm about to show you the 5 red flags they're hiding. But first, let me show you who's making money off this lie. December 2025. Goldman Sachs upgrades copper to strong buy. January 2026. Morgan Stanley calls copper the trade of the decade. Sounds bullish, right? Here's what they don't tell you. These same banks accumulated massive copper positions between 2020 and 2023. Copper at $6,000 per ton? They bought. Copper at $7,000? They bought more. Now copper's at $10,000, and they need someone to sell to. Enter the retail investor, you. They create the narrative. You buy the top. They exit with your money. Want proof? COT data shows institutional copper longs declining since November 2025, while they're on CNBC saying, buy copper. They're selling. Classic exit liquidity playbook. The question is, are you going to be their exit? Copper shortage is coming. You've heard it everywhere. Here's the truth they're hiding. Known copper reserves, 880 million metric tons. Annual global demand, 25 million tons. Do the math. That's 35 years of supply. But Ethan, what about EVs, AI, green energy? Great question. An electric vehicle needs 80 kilograms of copper. Sounds like a lot, right? Global annual copper production, 25 million tons. That's enough for 312 million electric vehicles per year. Last year, we sold 14 million EVs globally. We have 20 times more copper production than EV demand. And that's before recycling, before new mines in Chile, before substitution with aluminum. Compare that to gold. All the gold ever mined fits in an Olympic swimming pool. All the copper mined, enough to build 10,000 statues of liberty. Scarcity is marketing, not you want to know the difference between gold and copper? Watch what happens when the economy crashes. 2008 financial crisis. Copper? Down 60% in 6 months. Gold up 25%. 2020. Pandemic. Copper? Crashed 30% in weeks. Gold? Up 20%. 2001 dot-com crash. Copper? Down 40%. Gold? Up 15%. See the pattern? Gold is counter-cyclical. It goes up when everything else crashes. Copper is pro-cyclical. When the economy dies, copper dies with it. Right now, we're in the longest bull market in history. 12 years of low interest rates, printing money, debt at record levels. When this bubble pops, and it will pop, do you want to hold the metal that crashes 60% or the one that protects you? Copper isn't the new gold. It's the opposite of gold. Now here's where it gets interesting. If you actually want exposure to the green energy boom, you don't want copper, you want silver. Here's why. Silver is the best electrical conductor on Earth, better than copper. Silver is the best thermal conductor, better than copper. Solar panels? They don't use copper. They use silver paste. AI chips? Silver interconnects, not copper. 5G infrastructure? Silver beats copper for high-frequency signals. But here's the killer fact. Silver has industrial demand like copper. Plus, it's been money for 5,000 years. Central banks hold silver. They don't hold copper wire. You can stack silver bars, you can't stack copper pipes. Silver gets the industrial boom, plus the safe haven demand when markets crash. Copper is a one-trick pony. Silver is the industrial metal that acts like gold. That's the real opportunity they don't want you to see. It did copper, 2020 to 2023 at low prices. They created the copper is the new gold narrative in 2024 to 2025. Bloomberg runs the story. CNBC amplifies. Reddit hypes. You buy copper miners at the top. They sell to you. Recession hits. Copper crashes 60%. You lose everything. They're already in gold and silver, protected. This isn't conspiracy. It's documented market behavior. And right now, you're watching it happen in real time. The institutions are selling copper while telling you to buy. The COT data proves it. The historical pattern confirms it. The scarcity narrative falls apart under basic math. Don't be their exit liquidity. Don't buy the industrial metal that crashes in recessions. Don't fall for the new gold when actual gold exists. If you want the green energy boom, buy silver. If you want wealth protection, buy gold. But copper? I spent 40 hours on this investigation because I keep seeing people fall for the same traps. The media won't tell you this. Wall Street certainly won't. But the data is clear. Copper is not gold. It never will be. And if you're looking at metals right now, the real opportunity is silver under $40, industrial demand like copper, monetary properties like gold, genuine scarcity. No Wall Street narrative needed, just fundamentals. I'm Ethan Carter, Money Forensics HQ. I break down the money systems they don't want you to understand. If this analysis helped you avoid the copper trap, hit subscribe. Full silver breakdown in the description. Don't be their exit liquidity.